The dollar has been surging in value lately. What impact should we expect for commodities and earnings? What opportunities have been brought about by all these pricing shifts? If you've ever wondered how the dollar index actually works and why it matters, don't worry, we discuss that as well. Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that every dollar and minute we spend is an investment in something, and together, we're going to make the best investments that we can, so thank you so much for joining us. Remember, our goal here is to help you learn to invest financially and in all of life. You can always find more at investorinthefamily.com or subscribe to the podcast at iTunes, Stitcher, or the Google Play Store. And as always, if you'd like detailed show notes from today's show, simply text the word family notes, that's one word, family notes, to the number 44222. We'll be sure to get you all set up. Or you can go to investorinthefamily.com and sign up, and we'll be sure to get you taken care of there as well. Do you like shopping for insurance? Of course you don't. It can be a terrible experience, especially when it comes to life insurance. But if you have loved ones that you want to take care of financially after you're gone, then you may want to consider term life insurance, and Policy Genius is the easiest way to get insurance, period. At Policy Genius, you can figure out what you need, compare the top policies, get covered, and save. If you want to save on term life insurance, go to investorinthefamily.com/policygenius. That's investorinthefamily.com/policygenius for access created specifically for Investor in the Family listeners. I do get a small commission if you use my link, which costs you nothing. It's a win-win. Visit investorinthefamily.com/policygenius for more info and have the most enjoyable insurance shopping experience you've ever had. And I hope you enjoyed today's interview with Ian Bezek. Well, hey, Ian, welcome back to the show.
Thank you. It's good to be back.
Yeah, well, thanks for being with us today. And I want to follow up today on some work you've done recently on commodities and the dollar pricing. The price of the dollar has been surging of late. And again, this is late October 2016. Obviously, the dollar surging impacts commodities and earnings. What can you tell me? What's the basic thesis of that article and kind of what your thoughts are?
Sure. In 2014, the U.S. dollar began a tremendous run-up in value based on the U.S. Dollar Index, which compares the value of the dollar against 6 other global currencies. The dollar gained in value from 80 to 100, which is historically a large move. The dollar made a similar move in 2008, 2009, and prior to that, it hadn't made any moves of that scope, I believe, since 2000. And so it was a historically very large move, and it precipitated the fall in oil and has helped cause the problems with earnings that the S&P 500 has had over the past year. Earlier this year, the dollar had started to fall again. The dollar index dropped from 100 down to about 93. A lot of people were saying, oh, that's it for the US dollar. This rally is over. We can safely go back into other currencies. We can go back into commodities. The price of gold shot up from $1,050 up to $1,400. And people kind of celebrated. This is the end of the strong dollar that was wreaking havoc on our portfolios. However, over the past couple of months, starting with Brexit, the dollar has rebounded. That dollar index has gone from 93 back up to 98, and it's only a couple of points now away from new multi-year highs. And that's where we stand today.
What do you think is going on? Like, why would it? As far as the dollar rising and falling, well, actually, let me rewind that. You mentioned the dollar index as being measuring the dollar against a currency of other currency, a basket of other currencies. Help me understand that, because to me that's always a little bit confusing. I know that a lot of that basket is the euro, and then a little bit of the yen, and then a whole bunch of other places. Can you explain what's going on there?
That's correct. I'm not sure if they've changed it this year. The last time I looked at the basket, it was about 60% euro, and then, as you said, the yen, and then a few other smaller currencies with which the U.S. trades a lot, such as the Canadian dollar. And in doing so, it reflects the value of the dollar with the countries that the U.S. trades primarily with. As a whole, the EU as a bloc is the U.S.'s significant trading partner, and then the UK, Japan, Canada after that.
Well, and this is a situation where I guess it's so easy to think about the dollar as, here in America, as, well, the dollar is worth $1. And so we think of it as a fixed thing, but in reality, that's just not true. The dollar is one other asset, and you can look at anything, equities, bonds, commodities, on and on, those are all assets. And just like that, a dollar is also an asset. And so therefore, really the value of the dollar rises and falls. And that idea isn't necessarily new, but then the idea of the basket can seem confusing to me. But then you think about it like, well, it's not, those currencies aren't really valuing the dollar, but it's how valuable is the dollar versus, and literally looking at a basket, and if the basket has 60% of that basket is the euro, then another percentage is the yen. And depending on how those currencies are rising or falling in price impacts how valuable the dollar is related to them. Does that sound about right?
Yes, that's all correct.
Yeah. Well, it's helpful for me to talk that through because, again, it's one of those other things that can be, I've had that conversation with guests in the past, and I feel like there's always an element that was missing in my mind as far as how they relate to each other. But so the dollar's been surging in 2014, went from around 80 to about 100, which is a huge move. Early 2016, fell from 100 to 93, and that's when we saw gold jumping from like 1050 to maybe even, I don't know if it got to 1400 or not, but it got close, 1300. It got pretty high up there. But now gold is kind of tapering off a little bit, and the dollar jumped back from 93 up to 98. What's going on? How's that related to oil? Because oil has been up recently as well. What's up with that?
Sure. Yeah, I would say oil has been the outlier, oil and natural gas as well. In that if you look at, if you go to a website called Finviz, Finviz, they will show charts of more than a dozen different commodities over different time frames. And so if you look at this year, just about everything, gold, silver, the other metals, such as copper, the agricultural commodities, wheat, corn, the meat products. Basically, they've all been going down. Some of them have been going down dramatically, like palladium, which is a major player for car manufacturing, is down 25% over the past 3 months as the dollar's rebounded. And so you're seeing a huge sell-off out of commodities as an asset class. However, oil has bucked the trend because it has the benefit of whatever OPEC's up to lately that's been helping it stand out.
What has OPEC done different of late that may be impacting prices?
It seems, it's hard to say with OPEC because they're always talking about cutting supply and then they don't do it. But It seems like they're going to limit supply at a level below where the member states had been producing. So that should help oil. Also, Venezuela is an outright collapse, and that has caused, since June, Venezuelan oil exports have gone off a cliff. And so that helps the oil market because there's less supply now. Right.
So really, that's and is an outlier in every way because there's significant outside factors that are influencing the prices of oil and natural gas. What would cause the dollar to surge like it has been? Is there a way to put your finger on that, or is it just one of those things that's always kind of a big mystery?
It is a big mystery. However, in this case, it pretty clearly started with Brexit. Everyone had assumed that vote would fail, and so the market had priced in. The pound was trading near the highs for the year. The euro was strong. Everything seemed calm. Then suddenly Brexit passes. They decide to leave. The British pound goes down 10% overnight, the biggest move in many years. The British pound has continued to fall since then. And so that the British pound is a member of the dollar basket. But more importantly, that's also dragged the euro down with it because the UK and the EU are very close. And so a lot of people kind of arbitrage those two currencies. And so when one goes down, the other goes down. And so that's been the most direct cause.
Do you tend, this is obviously would be speculative, and to the degree that I know you're probably very much outside of your typical type of investment or preferred investment, but when you hear like the pound falling like that, is there any part of you think, hey, that could be an opportunity?
Yes, I've been buying British stocks since Brexit, and even through this month, I've been adding to positions in the large British companies that the trade is not that important to them. They sell products that the people that are price inelastic, that people keep buying them regardless. The companies like Diageo, which is one of the world's largest liquor companies.
Do you know the ticker off the top of your head?
Yes, DEO.
Okay.
I believe they're the world's largest liquor company, and the majority of both their manufacturing and their sales is outside of the UK. However, their stock has gotten stuck in it's British, and therefore it goes down because it's denominated in pounds. But their actual business is not affected by this. People are going to keep buying alcohol regardless of, they might need a new trade deal with the EU, but certainly people are not going to stop buying liquor because the UK left the EU. That's not going to happen.
If anything, they're going to increase sales more than likely. Well, any other companies stand out like that?
I've purchased AstraZeneca, which they sell drugs. I don't think that's going to change due to if AstraZeneca has a drug that no one else copies, certainly trade deals will be reworked so that the flow of those products don't stop. Similarly, Unilever, people are going to keep buying consumer goods regardless of the trade situation.
Excellent. And so obviously we talked about commodities, but this will have an impact on earnings. Here we are at the beginning of reporting season, as we're here in again mid or late October 2016. How does this impact earnings? I'll leave it to you.
It's going to be very bad for U.S. earnings. Maybe not this quarter because the move didn't really get going until the end of this quarter, but it will be very difficult for next quarter because you're looking at U.S. manufactured goods costing 3-5% more on a trade basis compared to their counterparts in other countries.
So basically selling outside the U.S. is going to be really hard.
Yes. And the dollar index is good for what it's worth. I mean, it's a good indicator to keep track of. However, it's worth considering that many countries that the U.S. trades closely with have seen far larger drops in their currencies. For example, over the past year, the Mexican peso has fallen from 15 against the dollar to 20, which is like a 30% move. And the U.S. and Mexico are huge trading partners, and so that's devastating for U.S. companies that want to sell to Mexico. On the other hand, it's fantastic for Mexican companies that want to sell to the U.S.
Yeah.
And so the companies that have manufacturing in the U.S. are just getting killed.
So are there any Mexican companies that stand out to you there? Because that seems like that could be a lot of opportunity.
Mm-hmm. The biggest issue is that a lot of them are traded on the Mexican exchange rather than the U.S. exchange. I own some, but I'd be uncomfortable recommending them without knowing listeners if they want to own pink sheet stocks. No,
that's totally fine. It's always fun to hear you speak on some of those things because obviously your travels and even living in Central South America gives you a lot of insight that many of us don't have, so that's fun.
I would just note, just before we change the subject, that if listeners want to look into things more, a lot of U.S. companies have subsidiaries in Mexico that are independent and publicly traded. There's a Walmart of Mexico that runs the stores down here. There's a Kimberly-Clark of Mexico. You can look at those. In some cases, they're yielding more than the U.S. counterpart, and they give you exposure to more growth. So,
those can be those are traded on U.S. exchanges.
They're traded via pink sheets. So
okay, right.
Yeah,
but that could be a way that would be, in theory, a safer, more reliable way, less risky way to trade pink sheets. I guess is the point.
Mm-hmm.
Okay.
Yeah.
Great. So in summary, the dollar index, which is measuring the value of the dollar versus other major global currencies, is saying the dollar is getting stronger related to those other global currencies. And because of that, commodities denominated in dollars are falling in price. And we can expect to see a significant impact or notable impact on, I guess, fourth quarter earnings of this year when we hear those reported at the beginning of 2017. As a lot of companies U.S. companies selling internationally are having more trouble with exports because they're having to sell their stuff at a lot higher value than they used to. And so that will impact their sales there as well.
Mm-hmm. Yeah, you just take a company like Boeing. Every time the euro drops another percent, Airbus, it becomes 1% cheaper for them to sell a plane to the U.S., and it becomes 1% more expensive for Boeing to sell a plane to Europe. And so you get a 5 or 10% move, and you're talking about Boeing having to drop $5-10 million off the price of a new jet to stay competitive, and that kills your margins.
Right. Right. And of course, yeah, it is fascinating to think about these things as far as what are the arbitrage opportunities. And obviously that can get into some tricky territory, which, probably isn't a good idea for a lot of us or our listeners to get into, but it's still fascinating to think about, because whenever you've got asset prices changing, that opens up opportunity. That's where is value being created. You mentioned opportunities in Britain and potentially Mexico, but anything else stand out to you opportunity-wise that this could be creating for us to be aware of and thinking about?
Opportunity-wise, for people that own oil and energy stocks, I would consider taking profits here, because so far oil has resisted the trend. But if the dollar makes new highs, I struggle to see oil staying over $50 a barrel. So this might be a nice time to lock in the higher prices.
Awesome. Well, hey, Ian, thanks so much for joining us again today. It's great to have you.
Thank you.
Well, hope you enjoyed today's interview with Ian Bezek. Remember, you can get full show notes with links and other details at investorinthefamily.com. You can always subscribe to the show at iTunes, Stitcher, or the Google Play Store. And if you want to receive my detailed summary sheet highlights from today's show, simply text the word Family Notes, that's one word, Family Notes, to the number 44222, or visit investorinthefamily.com and sign up, and we'll be sure to get you taken care of. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.